Welcome back. Well, Shyam Metalics and Energy, that's the stock in focus. I recall a year or so ago, we had ICICI Securities that come out with a note and they were very bullish on the stock. And now yesterday we had UBS that initiated coverage with a buy call, the target price at around 1,200 rupees per share. The brokerage has factored in a whole host of factors and that's how they come out this price. To understand about the way ahead as well as how things are shaping up, we have the Vice Chairman and Managing Director, Mr. Brij Bhushan Agarwal. Hi, Mr. Agarwal. Thanks a lot for joining in on the phone line. Well, I recall not too long ago when you listed, the market capitalization was roughly around $1 billion. Now you're on the way to around $3 billion and your operating profit as well from the IPO, well, it's more than doubled. So there has been delivery, but the market wants to know what's the way ahead from here on. Now, one focal point is the VAP as a percentage of your total mix. UBS has said that they expect VAP to move up as a percentage of your total revenue as well as EBITDA to the high 60% odd. So as of now, what is it? And do you believe that you can do that?
Hi, good morning. Good morning, Nigel. Sorry, I'm on the telephone since I'm traveling. So if you see, Nigel, like all our future growth, it is coming on the downstream. And we are putting more investment on the value-added product like stainless steel, aluminiums. And, on the other side, we are also going backward in adding some more power plant to cut down the costs. So in the time to come, if you see in last 3 years, our value addition was 17 to 18%, and today it is more than 50%. In the time to come, in next 3 to 4 years, we expect that we should be able to cross more than 70 to 75%. And most of the investment is on the downstream side, on the value addition side, and also going backward on the cost side.
So, Mr. Agarwal, when your value-added products contribution goes up beyond 70% as you're guiding, what will it do to your margins? Is there a number you have in mind?
See, it is difficult for me to spell out, but definitely whatever margins we are doing today, it has to enhance because, you are seeing all the downstream projects will add more value forward, and the investment backward is also reducing the cost. So definitely the margin should improve around close to 4 to 5% in the time to come.
Okay, all right. Let's talk about it on an EBITDA per ton basis, because you've been changing your mix towards VAP and stainless, the other products that you're coming up with, aluminum foils as well. On an EBITDA per ton, it gives you far better EBITDA per ton. Now, UBS in their note, they're saying that currently on the vicinity of around 4,000 rupees per ton. But they are factoring in a number in excess of 6,500 rupees per ton by FY27. Given that VAP will go up and you're focusing on the cost side as well, do you think that's possible? That's the aspiration, FY27?
We are completely positive on this. That is one of our major agenda, and we are diversifying into a different product mix in the same metal basket just to de-risk and to enhance the company more from the cyclic business to a comfortable business and more value-added product and more on the niche segment.
Right. So then we should work with an EBITDA per ton. The aspiration is that it moves to around 6,500 rupees at least by 2027.
We expect so. Yeah, we expect
got
so.
It.
Yep.
All right. So we have got that out of the way as well. Now let's focus on your capex plan. I recall a couple of years ago, or maybe 18 months or so ago, you laid out this ambitious plan, and you said you're going to spend 10,000 crore rupees as capex, which I think 50% is already done. So how much is left to be done? If you could break it up in FY25, FY26, how much would you spend? And what does it mean in terms of debt in books? As of now, your net cash, do you believe you can stay net cash?
Nigel, we started with around close to 2,500 crores capex during our IPO, and gradually with the time we have enhanced our capex plan to 10,000 crores. In last 3 years, we have already invested around 5,000 crores, out of which close to 2,300, 2,004 crores has been capitalized. And we expect that all this new capitalization, production and value should start, seeing in the coming year onwards. And for the balance of, 5,000 crores yearly, we are very concerned on our strong capex allocation plan. So this is going to be spent in the next 2 to 3 years.
Okay. All right. And you will continue to remain net cash, or what would the peak debt be in your books then?
We would love to be, because all the, if you see from last 15, 20 years, And, last 3 years also, since we are in the public domain, we have been always very concerned. Most
Yes.
of the capex and all we are doing from the internal accruals, and our borrowing is majorly on the working capital. Today we are sitting on the cash for more than 1700 crores, and we have enough, in the time to come, numbers in the terms of EBITDA and all to plan our capex plan. Yeah.
Oh, okay, all right. And I'm seeing, cash flow from operations is around 1500 to 1700 crores put together with that 1700 crores of cash you already have in the books. So you believe that you could stay net debt free even post this capex, right?
Yeah.
Okay. So since you mentioned about EBITDA, sir, as of last year, you did roughly around 1600 crores. But going by all that you're saying, the estimate is that the FY27 EBITDA could be in the vicinity of around 3600 crores. Doable? More than double from here?
If you see last 3 years from 6,000 crores, we have gone, our revenue has gone almost more than 13.5. And in next 3 years, 3.5 years, the new capex plan, what we are doing, we expect to more than double the revenue. And simultaneously, since we are expecting the margin as well as to enhance and further go better, we are in the line like we should be able to do a decent EBITDA.
Okay. And on ROCE, UBS believes that with all the steps that you're taking, the ROCE can hit 28% by FY27. Is that a reasonable assessment?
Yeah, because if you see, all the downstreams are not very heavy capex, and it's all value add, little different. So definitely the ROC has to go up further, because it's majorly on the downstream is creating more margins, and the capacity what had to be added on the upstream side has already been added, and most of the downstream, 70-80% of the raw material, we will be consuming. So which will also help us to reduce the working capital load and burden in the system.
Okay, so that ROC number will head towards the late 20% is what you're telling us. Mr. Agarwal, at times it's a little bit tricky for a promoter, right? You came out with an issue at around 300 rupees approximately, post a good listing, then the stock price did dip. And then, in fact, you have sold some stake in the company, you have done a QIP as well. Now the promoter holding has come down to 75%, but the market capitalization has gone up. So there could be some kind of temptation maybe to trim some stake, or will you hold your stake at around the 74-75%?
Not really OFSs. OFS is not at all, because these were the compulsion, and we have been always very conservative and prudent on our approach.
Yes.
As Shyam Metalics is always a very investor and stakeholder friendly company, we would like to abide whatever is in the interest of the company. We would like to go on that.
So as of now, you have no plans to sell stake, and you're happy, promoter holding is happy at around the 74.5%, right?
100%, yeah.
Okay, final question, sir. The last week we had the Supreme Court verdict that said on a retrospective basis there could be some taxation that could come and hit some of these metal companies. For you, is there any tax notice or tax demand that is outstanding?
Fortunately, there's nothing, 0.01%, there's nothing with Shyam Metalics. We are completely sourcing our raw material from the miners, so we are not under any kind of future or any liability in this Supreme Court verdict. Yeah.
Okay, Mr. Agarwal, we appreciate you joining in and clearing the air on a whole host of factors. UBS believes there are better times to come, and going by all that you're saying, you concur with that. VAP going up to more than 70%, EBITDA per ton to around 6,000, 6,500 rupees per ton, and the EBITDA number as well could more than double in the next 3 years from here on. Appreciate you joining in and wishing you and your team all the very best.